All right, so my name is Alan Chavarria. I am the CEO, community builder of a community based out of San Francisco called Fintech Portfolio. We are a community of ex-bankers that have been sanitized, reformed, and believe in doing well and doing good. In addition to that, we also have regulators and government officials that have become able to execute at the speed of a startup. And crypto world folks think of it as a confluence of backgrounds building companies from scratch by sharing resources in the fintech space. Very happy to be here since I believe that some of us have a lot of the same underlying mantras, and that most of these PFM / robo-advisors do believe in the same. You know, Vice Finance is actually free, and the world's first free, right? And so we'll talk about, I guess in general, the applications of artificial intelligence to the robos, or potentially a broader fintech landscape, such as in the case of Minkin. And then also, just kind of get started from the right place though. How many of you folks know what artificial intelligence is? People, okay. So then perhaps we just start with more of a broader aspect. As you guys know, artificial intelligence basically can impact credit decisioning at point of sale. For example, starts at a firm and aggregate a lot of data about your social graph, your behavior, who you're connected to, and effectively give you a smart contract at point of sale to give you credit. Similarly, some of the folks here have been able to data mine consumer spending behavior and then make recommendations that are able to save their users money, right? And thereby potentially generating a revenue stream for them. There's also other folks that may leverage artificial intelligence, such as BlackRock, or perhaps the financial group to perform stock picking, right? And thereby eliminating the need for a fundamentalist or a quantitative strategy to be implemented, again, through algorithms and signals. Compliance is another one, but without further ado, I want to go through a quick intro on the panelists. So we're going to start with you, Vicky.
Sure. Hi everyone, my name is Vicky. I am the co-founder of Wise Banyan. Wise Banyan is an online financial advisor. It's the world's first free financial advisor. So you would essentially use us to save or invest or financial plan for any goals that you have and get to any of those goals. And so that is what we do. Very interested and excited to talk to everyone here about kind of the future of fintech, AI, machine learning, all that stuff.
Hi, my name is Natalie. I'm Vice President of Product and Data Aspiration. Aspiration's online financial institution bringing socially conscious investing to the masses. And we're just trying to do well, help people do well, and do good at the same time.
Hi, my name is Min Kim. Sorry, my voice is kind of gone because I've been talking to so many people throughout the day. So I'm the Chief Strategy Officer at Daily Financial Group. We are a diversified fintech company based in Seoul, South Korea. We have about 25 fintech companies under our corporate umbrella. And we do a lot of things. We do robo-advisory to P2P lending. And one thing we do is artificial intelligence for financial institutions. So because that's the kind of the focal point, I will be talking a lot about our AI solutions. And our AI solution is called Da Vinci. You can think of Da Vinci as very similar to IBM Watson. So IBM actually sits a couple of floors below us in the same building. So we actually directly compete with a IBM Watson. But Da Vinci, you can think of it as an AI solution that could go into many different industries. But today, we are focused with financial institutions.
Great. All right. So who here has heard of the traditional robo-advisors and the current AUM? Special hands. What is the current AUM? Let's say upfront betterment. So it's in the 4 billion range. But the challenge that they're having is they're basically pricing themselves at an eighth of what they used to cost in traditional financial services. And the customer acquisition costs happen to be also double or triple for some of them. So you have a business model that's relatively broken. In order to break even, they need to have $40 to $80 billion, which is a pretty big range depending on the pricing. So it's always a race to the bottom, right? It's basically a quarter of the point. And now here we have some folks that are actually doing it even better for free. So customer acquisition costs are ultimately very important because you have to bump that up against your lifetime value of the customer, basic financial economics. And so why don't we go and start, across the board, start with you. How do you leverage AI to reduce your customer acquisition costs?
Sure. I think I'll just take a step back. I don't know how everyone else here uses AI to reduce customer acquisition costs, but I think for us, the lowest hanging fruit of customer acquisition costs is not that we need more technology to do it better. It's that a lot of products right now are actually built to have product market fit. And so when that happens, you end up having to pay a lot to advertise, right? When the product doesn't inherently solve a very strong problem for the client base you're trying to build your product for, then you have to put a lot of money into marketing. And then when you put a lot of money into marketing, surely people will come across, right? If I went out there and had a product that you didn't want to use, but I said, hey, I will pay you $10,000 essentially to use the product, would you use it? Probably. And so I think that's the problem that I'm seeing a lot of fintechs face. And so on our side, short answer is we're not really using AI to solve client acquisition costs. The way we're doing it is trying to build a product that is really geared towards the right demographic. So in our case, we have the minimums, and we also are free. And so our goal is really to help people start and save their very first dollar. Right? It's this idea that every dream that you have starts with $1. And so because that's a problem that a lot of people actually want to solve themselves, like I want to start saving money, I want $1 to use. By doing it that way, I think that's how we're actually solving customer acquisition costs, because we're building a product that has the right fit.
Perhaps a good question for you then, Matt, since your guys' product at aspiration.com seems to have not only a socially responsible fund, but also a different type of fund altogether. So it's two funds plus, call it a credit card or a debit card that yields 1%, which is much better than anything else that is out there. But also customers can name their price. So give us an idea for how you're leveraging all the latest and greatest algorithms or AI to provide that kind of service, which sounds pretty compelling.
Yeah, like what you mentioned, we don't really focus on using artificial intelligence in lowering our customer acquisition costs. Right now, the areas we primarily use in fraud detection. Given that we have both investment and a checking account product, we do a lot of transactions every day, and there's a lot of information and data being passed back and forth. So we have both internal AI systems to essentially self-train and identify patterns in fraud detection, and we also use some third-party services as well to use artificial intelligence. That's probably the primary way to use artificial intelligence at the time within aspiration. Down the road, we're definitely going to use it in terms of greater understanding of people's spending and saving behavior, and then probably provide recommendations on advice on how we can do to increase their spending and saving.
And pause for a second, because your answer, I think, is going to be a conglomerate sort of answer. You can take a crack at it if you want.
Okay. Well, for us, we use AI in many different ways. For one, we do also have a robo-advisor that uses machine learning. But in terms of, I guess, more relevant to you guys would be our business and the creating prediction models for financial institutions. So let me give you an example for two companies. One of our biggest clients is AXA Insurance. So we automate underwriting process for, they use our AI solutions to automate underwriting process. The second part is the banks actually use our AI solutions to improve their customer acceptance rate for loans. So whenever companies would apply for loans, before they would use a regression-based models in order to see if this person is good enough, having enough good credit to repay back their loans. But now we've switched on a new type of model by using AI. So we use machine learning-based models to create a new credit scoring system, so that before we would filter out some people who would normally get accepted, and now we would also decline some members who would before would have would have been accepted. So we use it in different ways, but now we actually improve customer acceptance rate. So we could better measure who are the customers that we should accept, so that we could eventually lower the default ratio. So that's kind of the part of it. And I guess the third reason is we're actually combining AI with blockchain. And that's kind of the main reason why I'm here today, is to kind of introduce our new blockchain network. But essentially, we're applying AI solutions to our current blockchain network so that we can more efficiently run the tokens that will be in supply.
Sure. So you mentioned that DaVinci, right, as a platform, it was
Yes.
split into lab, analyst, bot, and big data. So
Yes.
if we were, let's say, not who's there is Goldman Sachs, what are you going to tell them?
So under DaVinci brand, we have 4 different types of AI solutions or AI branded solution. The first one is called DaVinci Labs. That is a off-the-shelf AI solution, very similar to Google TensorFlow or I guess Microsoft Azure, how they would have, or IBM Watson. So these guys all have their own AI solution, but these are mostly, you will have to upload your data into the cloud, and a lot of financial institutions are not comfortable with uploading their data into the cloud. What we do differently is that we're an AI solution that's built specifically for financial institutions. So we have our professional team go into the financial institutions, we install our solution so that the data will not get out of their closed system. So we would teach the data scientists how to use our solutions, and they would start creating new machine learning-based models. And the first ones that they created were underwriting and credit scoring. But we are testing with anomaly detection, with fraud, or customer relationship management. There are a lot of other applications because artificial intelligence is such a broad topic and it has a broader application. But these are kind of the phases that we're going through. Right now, we've kind of tackled the core business of the financial institutions, which is where money gets made, which is credit risk management, right? So we've tackled that. We're starting to tackle new areas of problems or deficiency within the financial institutions.
You said you guys are about 500 people strong already?
Yes, so in total, our company, we have about 500 employees. We've received about $100 million in funding in total, majority from a company called Formation Group. Previously, they were Formation 8. And we grew out the company very quickly over the past 2 years. So we're doing from 0 to 500 people. We've made a lot of key acquisitions throughout the process. We've integrated some of the companies. And so in Korea, there was no AI solution. But we've actually acquired some companies, integrate them together to create this new product, new services that offers AI solutions to financial institutions.
Okay. All right, so just to go deep on expense analytics, and in the previous panel, you gave us a presentation, which was great, by the way. We spoke about Mint being version 1.0 of expense analytics. Yodlee is the one that got the double whammy because they got acquired and then they went public. So, or they went public and then they got acquired. But whereas Mint just got a simple exit. But originally, for those that have been around for a while, people used to make fun of Yodlee. Because Yodlee had built all the infrastructure to connect to 18,000 plus financial institutions, and Mint effectively put a nice layer, a nice UI on top of all that, and they got bought by Intuit. I think it was like 10x returns from the last revenue round, or the last venture capital round. So we talked about Mint, and we talked about Credit Karma, and then you're saying, hey, no, we were like version 3.0. So expand on that.
Yeah, so it's this idea where, we talked a little bit about, on the consumer side at least, right, when you're trying to be smarter with data. And I was talking to someone outside, and I gave this example. I won't name the bank, but you can put in any bank name in here. But I've been using a bank for, since I graduated from college. It was convenient, yada yada. And I had essentially almost all my life savings on there. And, a year and a half ago, my husband and I were, saving up to buy a home. And the bank never was able to, reach out and say, oh, it looks like you're saving for our home because of all the data we have. They never did that. And instead, we went out and just got a mortgage, Googled online, got a mortgage from wherever. And then a few months ago, we had all these offers coming in that are like, refinance your home, interest rates have gone down. And again, the bank didn't know that we had a mortgage and didn't know that they could offer us a better mortgage rate. And so it was just like whatever came around, I looked at all the flyers and I was like, I'm not going to refinance based on this flyer that someone put on my door. Again, I Googled, found a good one, The rate was a lot lower, refinance the mortgage. And then 2 weeks ago,
So as an entrepreneur, you were able to keep your credit score high?
oh yeah,
Pretty impressive.
by using WiseMan. A few weeks ago, I was pulled up the app on my phone for the bank, and can't even remember last time I stepped foot in the bank. But I was using the app to take a picture, to download, to deposit a check, and a pop-up came up on the app, and it said, "Vicky, have you thought about refinancing your home?" And I looked at our refinance mortgage, and I saw that eventually my bank bought my refinance mortgage. So just a few months ago, now they hold my refinance mortgage. And at the same time, now they send me a pop-up that's like, have you thought about refinancing your home when they hold my refinance mortgage? So that is kind of version 0.0, right? That is, they have all the data. They should have the capabilities, be very smart about the data, whether it's AI or not, but they should be smart with data, and it's almost the complete opposite. And so what you were asking and talking about earlier is almost, how do you become very smart with data? There was Mint, being version 1.0, they collected a ton of your data, but did you ever log in and feel like, oh, Mint knows who I am? And what I used in the panel earlier was, no, oftentimes I log into Mint and they're like, Vicky, your bank accounts are broken, connect your 10 bank accounts yet again. And then I felt like the iteration from there was Credit Karma. Credit Karma's idea is we can be a lot smarter with data, and we're giving you personalized information that other people can't give you or can't give you for free. And when you used Credit Karma in the early days, it felt like it had that personalization. And since then, they've certainly done a lot of work to try to keep giving you more utility out of it to keep being smart with data. But then the example I used was, it almost feels like what we're doing is the third version of that. Because what we're trying to do is to be your advisor and guide you every step of the way. And so similarly to how, or opposite of how the bank didn't even know what I was trying to do, even though it should have, what we're trying to do is, we don't even need that much data, but I should be able to use it in such a smart way that I know if you're the right client for the right product and what you need next, right? Rather than even just showing a pop-up at the right time, how can I get you to the product that you need or the service that you need right before you think that you need it? And a lot of that is being able to create a product not only that's good at using data, but that's really built on top of it, so the product is really personalized. So you mentioned spending earlier or saving earlier, but think about all the ways you use your money, whether it's saving, spending it, tracking it, deciding what other products you want to use that are based on your money. How do you do all that in a very smart way? And it's really starting with being very good with data and then being very driven by building your product on top of it.
So there's definitely the algorithm and the analytics portion of it, but what about the delivery? Do you have any chatbot? Are you guys planning on doing the chatbot that says, hey, by the way, or maybe I can just say, dear Wiser, where do I get my insurance?
Right, so maybe I'm just the contrarian here, but I used a lot of the or I ended up having to use a lot of the services that are like firstname.ai, right? A lot of people, when those first came out, everyone was using it, so I ended up having to email with them. And 6 months ago, I sat on a panel about AI, and the moderator of the panel decided to organize the panel using one of these firstname.ais. And it got to the point where I took a screenshot and sent it to my co-founder, because it got to the point where all four of us were agreed on the time to do the prep for the panel, and yet we kept getting emails where it's like, Vicky, it looks like that time doesn't work for you. Do these 10 times work? And this email chain just got ridiculous, and I just emailed everyone and said, okay, I think this is the time that works, does it work for you? So I became Vicky.ai. So that's an example I use where it would be I would love to have that idea of, products being so smart where they can talk to you and you don't even know whether or not it's a person on the other side, or they should be better than a person on the other side. I think a lot of companies have done it almost prematurely. And so rather than saying, do we need a chatbot, right now we're trying to make sure we solve this. When clients email in, do they get that personalized touch? It could be a person using technology that we've built, or it could be just purely our technology. But the idea is constantly pushing that level, and when we need more scale to go back to technology, go back to the data we have, rather than saying, there's a new version of technology out there, we're going to try to fit it into our model. Constantly, we go the opposite way around, where it's like, how far can we push our technology? Then how do we build on top of our data to enable everything we do, in person or not?
Right. So before we open up for a couple of questions in the interim, anybody else have any other opinions on chatbots and applications to whether it's PFM or Rogos? Yeah. Okay. There you go.
Well, I guess I would kind of share our experience with chatbots. So out of the brands that we have. One of them is Chatbot, and initially, about 2 years ago when we started the Chatbot research and development, it's been very tough because you don't get the response or the technology was not developed enough. And I think one key thing or decision or strategy that we took on was to experiment this and develop this together with the police department in Korea. So the police department, interestingly, gets the same questions over and over again through their phone or through their Kakao Talk or through different methods. And we thought about how to automate this through the chatbot process. And police department, more than any other companies or real private companies, was willing to take a chance because they don't have to really worry about the quality of the customer service because it's pretty much a monopoly, right? Like if the customers are not satisfied with the answers, like it doesn't really matter. So, so the police department actually took the step to work with us and to develop a better chatbot system. And we've been using it. And thanks to that, we were able to get a reference. And today we are working with other financial institutions that are adopting or testing chatbot solutions. So it's been a very, very interesting experience with the chatbot side. Still, I think the technology has a long way to go, but it's much better than what it used to be 2 years ago, and it's really, really developing quickly.
Microsoft got in trouble with the chatbot that was trying to do it. So that was pretty funny. All right, so obviously we're in a very diverse type of conference today. There's blockchain, there's AI. Any ATM anywhere in the world for free. It sounds pretty good, but it also smells like there's underlying blockchain that has to enable this, otherwise it's a losing business model. You care to comment on that?
I guess fundamentally I would agree with that comment, that you need blockchain technology to enable free money transfer. I do believe that blockchain technology, while very interesting applications in one reducing the cost of money transfer. I mean, we've seen with TransferWise the success of moving into a market that's relatively old with profit margins that are probably higher than it should be, and then coming in and reducing the cost. But I don't think blockchain technology necessarily is contingent or enabling. But I think down the road, it does have a lot of interesting applications, specifically in the world of ATMs. I think the thing that I find most interesting is the old infrastructure we have in America on our point of sale machines, our technology, is going to be a major impediment for us to reach the next level of artificial intelligence. Because in a lot of the realms, you're only going to get us your data. And a lot of point of sale machines, you only have to toll. If we have level 3 transaction data where you can see line item data, we can learn that much more about the user. The more you learn about the user, the more complex decision workflows you can create, and the more you can advise them. Right now, if you look at chatbots, they're really good at narrow applications, what's my account balance, how many transfers I did last month, give me my last 5 transfers. Simple questions, simple decision making, simple answers. But in order for us to advance to the next level, we'll need to have better data.
So it seems like customer retention is definitely one of the areas that you guys are leveraging AI for. What about scale? You can start doing that if you want.
I guess, for scaling, when I think about the forms of artificial intelligence, there's the lowest level forms automation, and there's machine learning, you have data in itself, and then there's level where it's self-learning and self-trading, which we really haven't reached yet. So for right now, the automation is really the way everyone else, every other cloud company automates things. So it's the our serving structure, bring up, bring down AWS services. As I mentioned, fraud detection, at scale, there's a lot similar to do algorithms. So those are probably application suites, but I guess at least that aspiration, we don't think they're really about how to use artificial intelligence to scale. Where's the biggest problem, and what solutions and technology can be applied to improve those problems.
How are you?
I think for us, I think we have a similar view, and again, contrary view. I think in financial services, AI right now is mostly smoke and mirrors, right? Or mostly bullshit. Because it's really about one, being smart with data, and two, having enough data, right? And if you look at financial services, there are enough companies that aren't being fully smart with data yet, where, how can you even take that step where you're talking about AI, or the pieces, the mechanisms of AI, whether it's machine learning, natural language processing, whatever it may be. But I think one way we think about how to be really smart with data and with massive amounts of data, just as a very concrete example, is when we first started, everyone asked us, oh, how many portfolios do you have? Right? It was a number that people wanted to be able to wrap their minds around. And it's like, sure, when we started 3 years ago, I forget exactly what it was, but let's call it 100 portfolios. And at that time, people felt like, oh, okay, your machine or your technology can create 100 portfolios. But this people team over here can also create 100 portfolios or thousands, maybe even. If you look at what we're doing now, our product, one, is a lot more complicated. We're not just creating portfolios, we're creating goals on top of what you want to achieve, how do you get to these different goals, what does that mean for you? And then we've also personalized that down to the individual level. So now if you were to ask me a question, oh, how many portfolios do you have? I don't even know the actual number. Maybe it's like 475,000 portfolios. But in reality, technology is built in such a way that it could have infinite portfolios. We certainly need to scale other things along with it. And so when I think about even this move towards how to become a company that does use AI one day, or this move towards financial services using AI in full, I think it's this idea of how do you create products and how do you create your technology such that you can make the move from, oh, we do this 100 times to, oh, we can do this almost infinite amount of times. And if you can do that, I think that's one of the biggest steps in order to make that move to having AI be part of your product.
Okay. So just to keep it dynamic, what do we take a question from the public?
So you mentioned several times the need for quality data and lots of data. Where do you get that data from? Is it all internal to information that customers give banks or other financial institutions? Or do you go out and scrape data that may be sold to you by third-party advertisers, or maybe get location data? I just was curious, each of your different companies, how you solve that problem.
Sure, I can kick it off. So on one hand, in terms of even using third parties, one, we are very, very serious of how secure our data is, so we do not share that with others. But in terms of how to gather data, I know there's a lot of fintech firms that do either scrape it and gather data that way. While it's useful for us, the biggest one is really understanding each person, what they're trying to do. So from our company perspective, a lot of the data that we have is actually given to us by our clients, because every time they tell us a little bit more, they're trying to make sure that their plan, their savings, their goals are more personalized towards them. And so it's not necessarily they're sitting there and just saying, oh, here's all my information, but I'm trying to save for a new home, for example. But it's not just me, right? If I'm married, my husband's also contributing to that. So now I want to tell the company, hey, by the way, I have this other stuff over here too. Can you take that into account so that my new home goal is on track? And so it's this idea of they're telling us more because it helps us with our product. And then while we have this information, it's that example of the bank, we can actually say, oh, now you're trying to save for, say, a new car. And we can look back through what you've told us that affects your other pieces of your financial plan and say, hey, by the way, A, B, and D over here also affects this new car goal you have. Let's just pull that into.
Good question. I think, the way we think about data is in various ways. There's user behavior data, which will allow us to capture ourselves, the way the person interacts with the website, the application, stuff you can get from Google Analytics, or you can instrument with tools like Mixpanel. Then there's user-given data, where this is where it's really key to understand their aspirations, their dreams, their financial goals, so then we can personalize the financial products for them. And then there's the data that we're given by our partners, our credit card processor. We can get the data where, once again, I love line item level data to be able to provide better integration information. And then there's also third-party data you can buy and you can augment, whether it's Experian that have access to the world, where you can get information on your credit score, you get information on someone's IP address and how you want to use it, account validation or fraud detection. So I guess when I think about data, I think about the application data, what it tells us about the user, and various sources we can get it from.
So if I'm understanding you correctly, most of that third-party data is used for anomaly detection then, to make sure that's not fraudulent, or is that factored into the decision of whether or not to offer a specific financial product?
It's just factored into some of the decision making and training our system to be able to reduce the number of fraudulent customers, which benefits everyone else. But that's just one example of how we use this data.
Okay. So
I'll be very honest. We couldn't solve the data problem. About 2 years ago, when we started our company, we were partnered with a company called Yellow Mobile. Yellow Mobile had about 100 mobile applications, and they covered about 80% of the Korean population. So it had massive data. But once we try to figure out how are we going to be able to use this data for AI purposes, for data training purposes, and we hired a bunch of lawyers. We went through thousands of pages of documents to try to figure out how do we utilize this data that we could potentially tap into, but we couldn't, which is the reason we kind of changed the strategy and created a actual solution. Basically making it easier for data scientists to use the data that they have internally in their own companies to train their data and create their own applications. So a lot of these financial institutions that we work with, they have massive data that's stored within their companies. So we made it easy for them to use our solution to train the data that they have. So we took kind of the opposite approach. It's very difficult for data scientists to learn how to use Google TensorFlow or Microsoft Azure or even IBM Watson, because it is not made for data scientists to use, basically. But we made a very simple solution called DaVinci, and we're licensing it so that they could kind of play around with it, and we've been training them how to use it.
Other questions?
Yeah, that's a question for all three of you. If there was one problem you guys had in one of the find a solution for the next aggregation, what would it be?
One thing?
Yeah, just one. If you guys had to work with your organization that you wanted it to be solved in the next 90 days, what would that be? Saying that if I was that guy, I would solve it for you guys.
Yeah, so here's a big problem, and I've been thinking about it for a long time. 3 years ago, still thinking about it today. And I said this earlier in the last panel. The Atlantic put out an article earlier this year, and it said 1 in 2 American households would not be able to put together, I think it was $400 or $500 emergency cash without selling something, right? And if you guys are interested, you should read that piece. It's very interesting, right? He talks about from his own personal perspective, and he's saying this is not just people who you think are poor, don't have a job. This is myself. This is the person you're working next to. This is your next door neighbor. They just don't talk about it, right? So it's like, if someone could solve that problem, which is what we're trying to do, that would be like game-changing, not just like for ourselves and our company, but if you think about the US economy, if you think about what we can do to push everything else forward, I think that'd be very interesting. But it's like at a high level, we can solve that problem. I think we're trying to solve one small piece of it, and we can solve it, with regulation, with companies, with a whole bunch of different ways. But it's like, if you can solve that problem, you can kind of change the world.
Yeah. Since you're naturally unique to solve any problem, I'm going to go for a very big problem that I think will benefit our company and a lot of other companies. I think moving to a cashless society could be a big benefit for everyone. One, the data on that would be far better. With the benefits of blockchain, in theory, fraud and tracking would be very clean. And then the understanding what your customers or what everyone's doing with their money, spending, saving, giving, stashing away, you'll be able to draw a lot more and better insights, and the tools that people can build on it would be amazing. Not to mention all the, you can have mid on steroids and understand all your spending behavior. So I think, not to mention the speed of money transfer would be a lot simpler too, which is I think, the faster is better. So today, ACH transfers take 2 or 3 days, moving money around internationally, and you lose money during currency transfers, exchange, but cashless society in theory would be able to address a lot of these issues.
I guess as for me, it's much more simple because I deal with a lot of day-to-day operations as well, and one of the biggest bottlenecks that we're facing today is on the HR side is we just cannot find enough good machine learning scientists or blockchain engineers to fill the roles that we need for the products that we want to take on. So we've been having a very, very hard time, just trying to look for these good people. But I think if there's a way to kind of solve that problem, then I think it will take a few more years because just the industry that we're creating is just kind of came out of nowhere and has been booming over the past couple of years. So it will take a few years for education, for universities to kind of step it up and provide that next generation of engineers to support everything that we want to do.
I'll take a crack at that one too, because I've been in Fintech for about 5 years, but license and banking for about 12, entrepreneur for about 20. And one of the biggest issues that I see in Fintech is it's a three-headed monster, right? You need the fin, the tech, and the regulatory compliance. But as you've heard in some of the other ICOs or token sales or you can call it whatever, the regulators are behind the time or haven't caught up to it or don't understand it, and the incentives within the regulator or the regulatory bodies are not the same as the ones that are pushing the envelope. So you can have folks from banking that are hiring whatever, best of breeds, and some of the other folks in government may want to do well and do good and whatever else, but they're not really catching up to those folks fast enough, or even fintech fast enough. So there needs to be a bridge, I think, to train and accelerate the knowledge. The incentives, I think, need to change for the regulators to sort of be a little bit friendlier towards the fact that a lot of these things, if you implemented, say, if you made it to the example that Matt had, Ecuador saved a ton of money by bringing their society into digital currency, digital fiat currency, right? So they save a lot of money on the fact that they don't have to carry physical cash just by that and start 151. That example leads to financial inclusion, right? So why would the government say no to the onset of fintech?
My name is are you guys operational only in Korea or is US a market for you?
Yeah, so we're a very young company still, although we grew pretty quickly over the past couple of years. But right now, our headquarters is in Korea, South Korea. Our first office we opened in Japan, Tokyo. That is strictly focused on our robo-advisory service called Quarterback. We recently expanded to Hong Kong, but that's just an office there. And for me, I grew up in LA. I lived in Silicon Valley for about 10 years. And then I went back to Korea for a couple of years to help start this company. And I moved back about 3 weeks ago. So we just opened an office. So in San Francisco. So yeah, we're looking forward to expanding our services in the U.S. Do we have any business in the U.S.? Not yet, but we're hoping to change that soon.
Great. Does anybody else have a question before we jump into regulatory stuff? The boring and cool. So a couple of good things I think for the friendly robos. The fiduciary rule I think helps your businesses. Is that fair to say?
Absolutely.
And, cool. But then similarly, there is a new entity, you could say, fairly new, the CFPB, Consumer Protection Fund, CFPB, right? Consumer for Protection for Financial Services or whatever. I don't even know what the acronym stands for, but I have met some of the folks, and I know that some of our peers in peer-to-peer lending or otherwise are actually getting into trouble. So there's a little bit of both, right? So can you comment on the pros and cons of new regulations and or the bodies that are coming up and looking at the data that folks are using and how they're using that data and potentially slapping heads?
Maybe this is a little bit more higher level, but I've always said to my company and to everyone who works with us, where regulation should be a helping hand, right? Because none of us are competing on regulation, right? We're not going to win the market because we know regulation or we're better. That's not the purpose. The purpose is to win through innovation and disruption. And so in that sense, I actually do want more regulation faster in a way, because everything we're doing is really I just want to know what the rules are so I can make sure to build the road following those directions. And so when I look at it in terms of how do we expand consumer financial services faster, I feel part of it is if regulation can also come out a little bit faster in terms of how they view fintech, that would be helpful. Don't know if that's just kind of dreaming at this point, but CFPB, I think it's the Consumer Financial Protection Board, and they're bringing out.
Consumer finance protecting your
Yeah, and they're coming out and trying to say, actually, fintech isn't just in verticals now, right? We have a lot of financial services companies, even the 2 or 3 of ours included, where you start off doing one thing and now you actually do a lot of different services. So I think a lot of regulators now are thinking of it a little bit more holistically, which is interesting. I think that's a good development.
I think when it comes to regulations, I agree that I wish they caught up, with the sign of the times, like the internet, and, just everything going on in fintech today. I do sometimes see a trend where, it's possible that this specialty of regulations might be outsourced as a service and separate from actually the technology company that innovates around the product itself. That might be a model that might be more popular down the road as, especially if regulations become more stringent, because the Venn diagram of people who have amazing skills at regulations and the people who have amazing skills at building knowledge, financial technology and products is not strong overlap. So I think in a way it kind of slows down the pace of innovation and entry into the market.
I don't want to insult anybody, but effectively saying you have hacker/pioneer married with Debbie Downer who says, no, you cannot do that. So it's a very hard thing to compromise. Okay, so everybody, for the most part, talked about goals. And goals to me are effectively time value money problems. Right? You start with some sort of amount now, rate of return, so that's your present value, growth over time, how many years, you can even do Monte Carlo simulators the same way that every freaking robo-advisor out there does it, right? So how do you guys track these goals? As a household, as a portfolio, as an aspiration? Tell us more about goal tracking. I mean, from a robo perspective, Wealthfront, for example, starts with risk. And most of the financial services folks actually started with risk. Your risk tolerance will be mapped to a portfolio. Whereas in this case, we're starting with an aspiration, a goal. Whether it's retirement, a big purchase ticket item, right, like a boat or whatever else. So can you comment on that?
Sure. So one way to think about it is, I would say, people don't care about money, right? People care about what money gets them. And so that's where this idea of goals come from. And I know financial services typically has started, even if they would talk about goals, it starts with risk tolerance, or it starts with a question where it's like, well, how much exactly are you trying to get to for that goal? But if you walk down the street and you ask someone, do you want to retire? Mostly the answer is yes. But then if you ask them, when do you think you want to retire? It gets a little bit fuzzier. But if you were to ask them exactly how many dollars and cents are you going to have at retirement, just, who knows? And if you ask them, what's your risk tolerance for retirement? That's an even further away question. So I think what we're seeing now is money has always been about goals, but the way companies have created products hasn't always been the way that people think about money, right? When you think about your own money, it's often almost one big pot. It's fungible, your goals change, and when one goal changes, probably every other goal that touches it changes too. But if you look at products up until recently, it hasn't really worked that way. It's been very rigid. A goal has almost been, I have a bank account, now you can rename that bank account. But that's not really how you deal with a goal and that change. Maybe they have a different product now. But banks do that now too, right? They're like, we do goals. I'm like, great. They're like, change the name of this one account. Now you have a goal account. So when we think about it, it's much more, how do you build a system where you work in the way that people think about money, right? So it's almost one big system. But when people change one part of a goal, how does everything else get affected by it? Because everything does, right? If I suddenly want to buy my home faster, probably everything else I'm working towards changes. If I suddenly lose my job and I need to use that emergency fund, everything changes. So in terms of how we think about goals, certainly they're concrete, but we're also trying to help people understand how to get to those goals. And then we also make sure that all these goals are tied together in some way, shape, or form.
Very cool. In regards to goals, I think, when someone identifies a goal or something that they want to achieve, you have to get there. There's many ways to get there, but I don't think there's going to be much innovation once you identify the goal. I think the interesting thing for me, is the prediction of the goals based upon someone's changed life events or classes of spending and saving patterns to help them think about, now that this life event happened, or I'm trying to I started to see the current doing this, maybe I should make this a goal. So I think the prediction of goal is the thing that really could help out people, as opposed to having people think about goals differently, because I just think that the application and benefit to the user is greater in that sense.
But it'd be true also that certain things the user cannot control, right? Capital market assumptions like inflation, for example, If that goes up beyond 3%, then everything breaks.
Yeah, so I think that's more about like the adjustment of the path to achieve the goal, but not, I guess, if I interpret the question is about like getting to the goal itself. Like, yeah, you can react quicker with, AI, with having better market data and adjusting and how to get to the goal on like some exchange. But like I think the prediction of the goal is where we can see like real applications to it.
All right, for Min, since unless anybody has any questions from the book, we have about 5 minutes left, so ask away. Hold your peace. All right, so since you guys have like a ginormous consortium, it seems like, and it's crowdfunding, law, robo, what are you guys doing in InsurTech?
So
Insurance technology.
So for Fintech, I guess right now we're not really, I guess it's pretty irrelevant to the topic here, the AI side, but we do have a consumer application that aggregates all the insurance quotes from different insurance companies. The difference between, I guess, some of the regulatory environment between here and Korea is that in Korea, every driver has to reapply for car insurance every year, annually. It's not automatic. So people would go into a website and they would check individual insurance codes. So it will take a few hours for them just to get quotes from different insurance companies. But we do have a AI technology. Maybe in this way I could kind of link it to AI.
Good to bring up the spot. I think you guys have done something.
But yeah, we do have a Da Vinci Big Data, which is very similar to Plate or Building, where we can aggregate data, pull information from different insurance providers, and give the cheapest quote or all the quotes in a matter of seconds. So, and that's a new, I guess, consumer-facing product that we've created just within the past 6 months. And yeah, I guess that's how
There's some lemonade something I saw on your guys' site.
It's called D11.
D11.
Yeah,
Okay.
that's the service that we have. It's called D11.
Well, in the States, for anybody who hasn't followed the insurance technology space, rather than buying insurance for a month, you can now get insurance for 1 mile through places like Metromile. Similarly, there's also apps like WeSavvy that track how long you're sleeping, how much you're eating, your health habits in general, and feed that into the insurance carriers to then give you a price, not based on a lot of numbers and distribution curves, but based on your own behavior and your own lifestyle. Very good. Go ahead.
I have actually 2 questions. One, because you started the insurance thing. With these automated vehicles, self-driving vehicles, where do you see insurance a couple of years down the road? That's one question. The other is, do you see any hot use cases for AI and blockchain together that is huge opportunity and it could be profitable?
For the first question, I think with the automated, selfless drivers, the chance of insurance costs would continue to decrease because of the fact that, with more automation, I think the roads will be safer. That will decrease the risk of accidents, so it will decrease the cost of insurance. Or, a better world will be where you don't need to pay for insurance at all, and where you don't need a car. So I think that's the future that we're kind of going into. In terms of AI and blockchain, that's a very, very interesting question, and it's the question that I've been thinking about over the past year or so. Is we've actually, in our company, combined the AI division with blockchain division because they both deal with data. One that deals with data storage, how it's distributed, and the other is how you work with data. And that's the kind of the main purpose I'm here today is to introduce our next network. It's called Icon Network. And a lot of the decentralized platforms that you see today talk about one of the biggest challenges is money supply. How are you going to continue increasing inflation and also manage the token supply and manage the economic activities within the platform? And that's been like a very interesting question, and a lot of people have been, I think, avoiding the question through, oh, we're gonna have a better governance, or we're gonna apply AI. But when you talk about like applying AI to manage token supply, like none of these companies actually have real experience with AI when it comes to managing money supply. Which is the reason I think our company, Icon, has a huge advantage because we actually have the experience. We work with banks in a way, although these banks are more of a closed system. It's not like a central banking system, but more of a smaller bank that lends money out to individual companies. And they lend out money and they receive interest and money back. So they, in a sense, increases money supply and decreases money supply. So we are actually doing this. Sorry?
You guys had a fight with the government recently?
So we have many fights with the government and the city of Seoul. But our, what's cool about what we're doing is that we've been studying this, and we actually have AI in place, an AI solution, and the experience to actually think about how we can apply AI to the real money supply or token supply system that we're creating. So that's what makes us kind of unique than other, I guess, companies that are out there or other token sales out there.
So you guys also have solutions for asset managers, right? That are AI driven.
Yes.
Can you talk about those? I mean, BlackRock announced that they were going to be laying off a whole bunch of people on the fundamental side of their business, and there's also a new wave of stock picking called quantamental. You care to comment about any of those things?
So right now we have two companies that deal with equities or asset management side. The first one is called Global Quarterback, and that's more traditional, wealthfront or betterment type of advisor. And in Korea, we're the largest, and in Asia, we're one of the largest. We're managing about $200 million in AUM. And most of them right now is strictly B2B, because B2C is not, legally, you can't really do it today. And plus, there's like all these KYC issues, user experience issues. That's the reason. It's very difficult to do any B2C type of robo-advisor in Korea. But that's one side. But the other side, we have a company called Newsy Stock, and that is more quant-based stock picking type of robo-advisor. And we partnered up with a stock broker called Q Securities. It's one of the largest online securities companies. And it's basically you go to this website and you download the software and you fund it and you let it run based on, you just pick an algorithm that you want to pick and you just let it run and it just automatic trading for you in the with the securities. So we have these two type of robo-advisor available with our current platforms.
Great. I think we're out of time. It's been a fantastic opportunity for me to actually study your companies and pleasure to actually be here. Full disclosure, the questions were not pre-submitted, so everything you heard was on the spot and in the top of mind.
Thank you.